Hello there. How's it going? I just want to welcome you to this video. This is going to be a very interesting, different video. I'm going to be reading this report with you. So this is a very important report that is released every year. And I use this as part of my idea generation process because this is a leading indicator. So we're gonna go over this. So we're just gonna read along with me. We're just gonna go through this together and see what we can uncover. And all right, so this is the wealth report. You can get it on the Knight Frank website. You just download it. It's free, and they have a lot of interesting information. So this is the 2020 report, and this is a global perspective on prime property and investment, 2020 edition. So this book is speaking generally about people who are investing in the real estate markets. This is Knight Frank. And everything that is in the report is for that client or for that target audience. So before we get into this, I really hope that for this particular video, if you need to, you should just have somewhere to take notes down so that you can refer to some of the terms that we're going to use here in some future videos, so that you can know this. So this video is targeted at people with prime property and high net worth individuals and ultra high net worth individuals and billionaires. So this is what this whole report is about, because that's their client and that's their target audience. So I really love this, and I think it's very informative for a person who's invested and interested in the markets. So first, let's just get the foundation and the scope, the infrastructure of what we're going to be discussing. So we're going to be talking about ultra high net worth individuals, or we're going to be reading this from the perspective of ultra high net worth individuals or high net worth individuals, or just generally billionaires. So an ultra high net worth individual is someone with a net worth of over 30 million, including their own house. High net worth individual, someone with over a million. Okay. So they invest in prime property, the most desirable, most expensive property in a given nation, generally defined as the top 5% of each market by value. Prime markets often have a significant international bias in terms of buyer profile. So what we're going to be exploring is something that is targeted at the richest people. So these are the people who make our financial decisions, like it or not. Money is power, and they're the people of power. They're the people who are invested in areas that have a high value in any country. So how they direct their affairs is first of all given to them by people who are like paid to give them advice. Like they pay consultants, advisors, and lawyers. And this is an aggregate of a company, Knight Frank, which is getting and compiling all of this information for people who are highly informed so that they can make better informed decisions. So these are the people we call the smart money. This is the smart money. So you being in this video right now is changing your perspective, changing your dimension from being the regular trader to being a professional smart money person, because now you're seeing the whole landscape, and this is just the infrastructure. So if we just acknowledge the fact that society is aggregated of different people, but based on economic net worth, those people have disproportionate control over economic affairs. So there's so many people who have money, and all right, there are a few people who have money, and they are in charge of a lot of businesses which affect a lot of people, such as Walmart. So Walmart is the biggest employer in the world, and that business is run by a few people, just like how everything in society is governed. One classroom has one teacher, right? One vehicle has one driver. So very few people in practical terms are in charge or in direction of a lot of people. This is what democracy is about. This is what dictatorship is about. And this is what it's always been like. Very few people are in charge of a lot of people. So it's important for you to be in a place whereby you are counter trained and you're operating from a place where um, you have actions that are done by very few people which give you good results. And in my book I write about the parable of the sower, which speaks about how you get a lot from a little. So this is the parable of the sower, where the sower planted seeds on 4 different patches. So some of the seeds fell on the rocky ground, some fell on the path, some fell among the thorns, but 25% few of those seeds grew, and then they gave him more of his bounty. So this is something that is practical in so many different terms. And yeah, I just overly explained that, but it's very important to get the significance of what we're going through as we're getting into this information. All right, so the data sources, this is very important. Where is this data coming from and where is it going to? So numbers from Knight Frank's proprietary research and from carefully selected third parties lie at the heart of the Wealth Report's findings. Some of the key report sources are the PR100, okay? So the index, compiled using data from our research team around the world, covers major financial centers. All right, so this is determining financial centers, and the biggest financial center in the world is America, but when we look at it in terms of currency exchange, it is London. And some of the biggest futures financial centers are in India, which is the biggest one, and in South Africa for emerging markets. So that is actually the biggest futures trading platform. So this is what I saw in a Bloomberg article. It was talking about how India and South Africa have the biggest futures platforms. So certain financial factors are in different countries, such as Asia has Singapore, has a big financial center. China also has Hong Kong, and in Africa would be looking at places like South Africa and Nigeria and Egypt. All right, so gateway cities. This would be a place such as Singapore as well. So second home hotspots. So this is in a place where they reside, both coastal and rural, as well as leading ski resorts. Ski resorts. So the altitude survey. This is going to be very important, and we're going to get into this. So the 2020 installment is based on responses provided during October and November 2019. All right, by 620 private bankers. So this is actually a pretty huge group, because the people who we are observing, what we are investigating, or what we're investing in, is a group of a very few people in relation to the world population. And wealth advisors, over 3.3 trillion of high network. So special thanks to all of these places. So we're looking from Australia, New Zealand, Singapore. And it's also interesting to me to realize that Standard Chartered, which is the Standard Chartered of Singapore, which is a big bank, but Nedbank is also involved here. And Nedbank would be one of the biggest one of the biggest companies, period, one of the biggest banks in Africa. So it touches everywhere, from Standard Chartered, which is actually the biggest company in Africa, but that's Standard Chartered, but this is in Singapore. So all of these are financial centers. And if you're really into reading, you can go through all of these banks. They have things that they publish, which has a lot of information, a wealth of information. So so that is important. So our information is from those people, very credible. All right, so we've verified that. So this is something that is an aggregate of all of those data sources. So this is like how we cut through all of the noise, and in however long the duration of this video is, this is going to cut all of the other noise out, if you're able to actually understand what is in this video, watch it over again and get some of the points that you may have missed, because this is gonna show you how trends are formed, what forms them, and how they actually come about. So there's going to be a lot of information about investing, and not just information, but highly specialized and highly targeted information for a person who is willing to expand their net worth and their capital flows in this moment. All right. So our new model created by our data engineering team. So they also have other other areas. So some third party data. So they have a super yacht intelligence and private jet market guy. So all of this is actually part of their surveys and their reports, because they're looking at all of those people. All right. So, all right. So let's just get now to the article that I want us to go through. All right. So let's go to page 10. Yeah, so there. So you can just go on to Knight Frank's website, or you just Google the Wealth Report, and you can just download this. So there are a lot of other articles here, and I just want us to go straight to the one that I'm looking for. All right. Okay, so here we go. Here we go. So this is an important study for a person who is getting into the markets, and a person who is into global macroeconomics, like international trade, international investments. If you're interested in things like geopolitics, okay, this is a person who is like, if you actually do watch that economic forum stuff, cutting through all of the crap, all of the noise, to get why all of these global heads from every country are there, what they're talking about. So this is for a person who's oriented in those terms. If you actually do like the financial and investment side of the trading and speculative business, then you'll be more in tune to something that gives you a broader view, so that you can be able to trade intraday, intra-minute, intra-week, and still be able to invest for a long period of time. Because when you look at the best currency traders, some of the best currency traders would be yeah, as much as people might hate to admit it, the best currency trader could be George Soros. I think he's one of the most successful currency traders, forex traders. And some of the best global macro traders would be someone like Paul Tudor Jones. And some of the best value investors would be obviously someone like Warren Buffett, but someone like Charlie Munger, to me, he really resonates with me. And some of the like new, almost algorithmic, computer robot-y type trading, not exclusively, but slanted towards discretionary trading, which is more modern, would be someone like Ray Dalio. All right, so here we're going to be looking at the different wealths of the different people here. So this is the global ultra high net worth distribution. So this map is showing the whole world, and it's giving us data on how this how the people in the different areas have accrued wealth over time. Okay, so here okay, sorry about that. The So this is the result of Knight Frank's new global world sizing model. Okay. So what we're looking at is the world map, and it's showing us that 44% there's been a 44% Asia's forecast 5-year ultra high net worth individual is double North America's projected rate, with high growth expected in India at plus 73%, China plus 58%, and Indonesia plus 57%. Okay. So, what we're looking at and what we've already gotten is information that is very potent if you know how you can use it. Okay. So, all of these projections are given by the sources that we've already gone over. Okay. So, what they're saying is there've been a 44% growth. All right. So, this is an forecast for the next 5 years, counting from 2020. All right. So, they're saying that there is likely going to be a 44% growth, and this is in Asia's forecast is double North America's projected rate, with a high growth expected in India. So in India there's projected to be a 73% growth, in China a 58%, and in Indonesia a 57% growth in ultra high net worth individuals only. So this is what it's talking about. This is what it's targeted at. And this is what we're doing. So essentially, what we're doing right now is we're looking at a chart of global money flows, which is giving us. All right, so what we're looking at is a whole chart of the capital flows among, between, and generating from ultra high net worth individuals and billionaires. So this is telling us something very important. So I just need you to just be patient so that we can go through the information block by block, so that we can go through everything. So right now, maybe this is not making sense because we just got to the whole drawing point for everything that could be confusing you a little bit. But what we're gonna go over is what this actually all means. So let's start here. So all right, yeah, let's just start here. I don't know if this is a good spot because this whole page, this whole spread is huge. So we could start anywhere, but we just have to start somewhere. So we might as well just start here. So what we're looking at is this chart here. All right. So this chart is saying global ultra high net worth distribution. This is showing the distribution of high net worth individuals in the world. Who knew that they actually track this stuff? When I discovered this whole report, I was very interested in it because I never knew that this is a study. Actually, it is a study, but the actual name of the study is called plutology. As a person who is interested in everything, it's interesting that Pluto is the country of plutology, which is the study of, not country, planet, whoa, which is the study of wealth. So this is all very distant to a lot of people, and a lot of people might not understand it. This is a bit yeah, it's a very interesting aspect, because understanding these fundamentals is giving you a whole different point of view on how to look at the world markets and how to view trading and how to get risk and everything. So this is going to go a long way, because I'm just going to try and interpret some of the trends and some of the things that I also discover. So just reading with me, we're just going through all of this together, so let's go through it. And yeah, just go on the website, download your own, and then just go through the whole thing. But this is just going to be this one article, which I think is outstanding. So here we have individuals with over 30 million. So in the US, this is the first one with 240,000 people, 575. and China being the second one. So what we're looking at are basically the GDP rankings of the countries of the world. So this is just G20 for you. This is what this is. So, all right, I was actually thinking of not going to other sites, but let me just do this. Let me just do this. Let me just do this for you, okay? Because I don't know, like I just want you to be able to see what I'm looking at and to be able to understand the impact that this information is not available to just anybody. And once you have knowledge of what you're looking at, you'll be able um, to get a different perspective on everything that would be happening in terms of the charts. So right now, I just took a segue. I'm on tradingeconomics.com. Okay. So I just want us to look at something that is related to what we are looking at. So I want to be able to express the views or the way that the information in the wealth report applies in the broader sense of the economy. So here, what I'm looking at is the GDP annual growth rate of all of the countries in the world. Okay, all of the countries in the world. This is the GDP annual growth rate. So this refers to the country with a biggest percentage data number as compared to other countries. So at the very top we have Ethiopia, which has the biggest growth in the world. Did you know that it's Ethiopia? And this is from the December 2018 data. So this is annual. But in 2019, we have Rwanda. This is the biggest, fastest growing country in the world, an emerging economy. Okay. And then we have Bangladesh, we have Ghana, we have Armenia, Cambodia, and all of these other countries. Tanzania is over here. So these growth rates are really huge, really fast. So there's a likelihood of all of these countries to grow fast. However, we have to realize that there are not so many, the GDP value is not as big as other countries, which we find further down the list. So what I'm looking for are the countries that we know, like Australia. All right, Australia is here. All right, we have Indonesia. Indonesia is here. All right, so we have Israel here, 3.7. It's a lot of innovation in Israel. It's very interesting. All right, we have Morocco, Denmark over here, 2.2. Portugal. We have Congo over here. All right, Morocco, one of the biggest economies in Africa. Russia, yeah, it's pretty high. Mozambique. All right, we have Canada over here. This is where we're finding Canada. Look at it. So very slow growth. We have Switzerland over here. This is from December 2019. The growth has been so slow. Only 1.5% growth. Before that, it was 1.1% growth in Switzerland. And this is the country which has one of the highest GDP per capita in the world. Norway. If not the Norway, Sweden, and Switzerland. These are the countries with the highest per capita growth in the world. The highest per capita value, the value of the per capita in Norway, Switzerland, and Sweden are the highest in the world, and followed by countries such as Australia and Germany. The United States is high, but around, it's not the highest. It's not the highest, not by a far cry. And all right, well, maybe not a far cry. But anyway, this is where we find the United States, all the way down here, according to the March 20 data, which is also recording the annualized growth rate. So this is all impacted by certain things. So we can look at the 2.3 percentage growth as the previous one. So we have around 2% percentage growth for these countries, and all of the biggest nations are growing really slow, and this is because of the different sizes of the economies. So when we're looking at the way that um, America is growing, it has a $20 trillion economy, and this is influencing how quickly the whole economy is likely to grow, because it's not easy to just multiply 20 trillion and make it grow by 10% in this economy, in this whole world ecology, because where is the money going to be going directly? So here I'm just looking for China. So yeah, where is China? China, where is it? So we have to find all of the countries, and then we'll be able to determine this from the aggregate view, because it's low right now because of all of the because of okay. So looking for China. All right, so it's here, it's lower here. So all of this, now we're looking at the negative GDP countries, and all of these countries have their different growth rates, and they're all um, linked to, right now, some of them, if you look at the date, some of them are linked to the March 20 GDP numbers, which is showing a negative reading, and this is where we find China. But China regularly grows at a percentage of 6%. Okay, so this is what we're looking for. This is the average, what we call the new normal, and things like that, which is 6% of a huge economy. That's why China is such a big deal. So that's one aspect. So it would be ranking among the higher GDP annual growth rates, fastest growing economies, but it's very low because of what is happening all over the world. So as you can see right there are so many countries that are posting negative red GDP numbers all over the world, and this is because of this whole great lockdown situation we're in. All right, let's go back on track. All right, so we just laid the landscape. We're looking at countries with big economies. And then what we saw is that they have a lot of these high net worth individuals. So although those countries have a big, like the highest growing country in the world was Ethiopia, right? With the fastest GDP growth rate. So just comparing those two, we are, where is Ethiopia on this list? It is non-existent. All right. Then we have Nigeria here, which is lower down on the list. All right. And then Kenya here, Morocco there, they're lower down on the list compared to the countries which have slow growth rates. So the US has a growing number of ultra high worth net individuals, has the highest number, in fact, followed by China. So China is a very, very, very key element in analyzing global cash flows because of the reason that we're discussing here. I went through the length of showing you that all of these countries are growing pretty slow, except for China. But China is growing pretty fast, and it's already pretty huge. So the impact of what China could be for global market flows is very big. So that's that's something that is worthy of study, and however long you invest in investigating in that issue, you're going to be able to reap rewards of that investigation, of that investment. So this is why that was very important. So it was a very important segue. So now let's move on. I don't want this video to be longer than it has to be. All right, because there's so many things we could go through right now. But then I just want us to stick to the point and to forge in this. So all right. So the US dominates the rankings with 240,575 ultra high net worth individuals, more than Europe and Asia combined, right? Accounting for almost half the global total. So, however large China is, however fast it's growing, America is still growing. Maybe not as quickly, so China can catch up. So maybe America is not growing as quickly, but right now it is the determining factor in all economic variables. So, plus 6% growth in ultra high worth individuals globally in 2019. So, this is recording that in 2019 there's a 6% growth in ultra high net worth individuals globally. So, this is a growth of people with a net worth of over 30 million. 513,244 of those was the total number of high worth net individuals worldwide in 2019. The 27% 5-year growth forecast would take the total to 649,331. So this is now showing us that the growth is still being projected. As we already read, we saw that this was compiled with data from 2019 up to 2020, but it's published this year. So it doesn't have the new information, the new data that is centered around the pandemic and all of those related issues. But we're gonna touch a little bit on that in a bit. But it is important to know that what we're looking at is a projection that is also determined by people who are well informed, in the sense that it is still able to give us a clear picture of how wealth flows are likely to happen, given that the fundamentals remain constant. So in 5 years, they are projecting that there will be a growth in 27% of ultra high worth net high net worth individuals, from 500,000 to 650,000. So this is a trend that is growing at a very, very fast pace. An average of 5.5% a year, right? Somewhere there. So 6% growth, another 5, another 7% growth, until we have somewhere around 27 to 30 maybe percent growth. So what does this growth mean? All right. So economically, 2019 was outwardly a tumultuous year. All right. So now this article goes into all of the factors of last year. So in January 2019, 2.9%, in January 2020, a 10-year low. So the projections of last year's GDP were lowered, and this was when the market was actually functional. So despite this, the world's ultra high net worth population, all right, so this is the definition of ultra. So it rose by 6.4%. All right, so this is borne out by results of our attitude survey. All right, so this attitude survey is going to be very important, in which 63% of respondents said their clients' wealth had increased in 2019, with only 11% reporting a decrease. So let's just look at this visually again. All right, so this is the world, and it's showing us all of the high net worth individuals. So now Asia tops regional growth. So this is a forecast, and this is in the past. All right, this is 2019, this is until 2024. So they are projecting that Asia will grow, and the second to grow is Africa, and then Australia, then Russia. So what it's showing us here is that there's the most growth, the quickest one is in Asia and not in America, even though America has the biggest one. The second quickest growth that is showing more growth potential than North America is Africa. Yeah, so it's a very, very interesting thing that Africa is projected to be one of the um, fastest growing in terms of ultra high net worth individuals. So let's see if there's more information that's helpful to us right now. All right, so Asia is quickly closing the gap on Europe as the fixtures. All right. However, even following this heady rise, Asia's ultra high worth, yeah, still half the size of the expansion in wealth during 2019 is unsurprising. Okay, why? Given the strong growth seen in many asset classes. All right, that's okay. So according to our attitude survey, an average 23% of are made up of equities. All right, so this is also showing us what they invest in. Invest in equities, meaning that their performance takes a large contribution to rising wealth. So yeah, let's look at this. So over the next 5 years, we forecast that global ultra members will grow by 27%. Of the top 20 fastest growing countries that we measure, 6 are in Asia, led by India with 73% growth. Okay, so they project India will grow that quick. 5 are in Europe, led by Sweden with 47% growth. And 3 are in Africa, led by Egypt with 66% growth. All right, so they're saying that of these countries that are going to be growing quickly, we're going to be seeing that India is going to grow very quickly. So this is given by a learned person who's telling this to an ultra. All right, so 5 are in Europe, and Sweden is growing pretty quickly. Now, the thing about Sweden, as I mentioned earlier on, is that the per capita numbers of Sweden, of Australia, of places like Denmark, and even their standards of living are pretty high. So this is interesting, and they're projecting a growth in 47% in that country of those people. These people who drive business, who drive commerce, who drive economics. So they are projecting that there'll be a growth in terms of the ability for people to make capital and to invest in it by 47%. So this is pretty low compared to India with 73% growth. All right, and Egypt with 66% growth. This is in Africa, quick and fast growth. And this is almost a certain trend. So this reflects the positive sentiment captured by the attitudes survey, with 55% of respondents expecting their clients' wealth to increase in 2020. All right. So given the fundamentals, everything having had been the same, the wealth of the wealthy would have grown, okay, in 2020. So those in North America were the most bullish. 77% are expecting a hike. All right. So as we've already determined, a huge economy like America does not grow very quickly. And they're very, very bullish. And the whole sentiment. All right. So when we speak of a sentiment indicator, this entire report is a sentiment indicator. Just like how business PMI report, ISM manufacturing report, or ISM services report is influencing the movements in currencies. Because this in turn influences things like non-farm payrolls. Because we're going to expect to see growth in those sectors such as in countries such as Sweden, since they're projecting a 47% growth in total net worth or net wealth, then we're going to see how this impacts a currency. We're going to see how this impacts an index. We're going to see how this impacts relative value and growth. And this is very key and important. So this factor alone, knowing the positive sentiment of the attitude survey, is a leading indicator. So people are always speaking about using a MACD, using a moving average. All of those things, indicators, all of those are lagging indicators. But when we begin to speak of things like the attitudes of the wealthy, this is a leading indicator. So this is very important. And there's projected to be a huge bullish sentiment for the people in North America. And we're going to explore that in more detail just now. So let's take a look at what this looks like in terms of putting it in perspective. All right, so don't get immersed in too many things at once. So there's so much information in just these pages we're exploring, but right now I just want us to take a look at, to do the future gazing. So now this is important. So before we were looking at how the biggest economies have slow growth, right? But now we're looking futuristically. And what we're doing is we're looking at some of the highest and lowest forecasts growth of ultra high net worth individual populations over the next 5 years. So we're looking at a 5-year growth horizon of ultra high net worth individuals. All right, so stay with me. So the fastest, as we've already read, is projected to be India with 73% growth. All right, and then Egypt. So Africa is presented to be growing the quickest, the fastest, and this is where ultra rich people are going to be placing their money, in places like India, in places like Egypt, in places like Vietnam. They're not going to be placing their money in places like America as quickly or as projected by this survey, which is very important, groundbreaking, because the people who are investing in the Indian growth are giving this growth, or are giving this money, that opportunity cost, to accrue in an area like India. This is the smart money. All right, so this is the percentage of the market that has enough money to move markets. So markets are going to start moving in places like India, Egypt, okay, in places like Vietnam, China, Indonesia, Tanzania, okay. Tanzania is in Africa, Egypt is in Africa, Vietnam, India, these are in Asia, and China is projected to grow very quickly. All right, so in the future gazing, they're projecting that the 15 trillion dollar economy of China is going to grow even further by 58% in the next 5 years. This is interesting. So what about the US? Where is it? So in this growth projection, we're seeing that the USA, where is it? So we have Spain here. All right, so I feel like I jumped so many countries. So this is India, right? Indonesia, it's gonna be growing pretty quickly. All right, Tanzania. All right, how many people actually in the economic universe that you're accustomed to, how many people are actually looking at Egypt as a potential investment? Very few, because those people are the outliers who are who are like in whatever shape, form, or fashion you come across that information, you're using it to your own advantage, which means that you're actually gaining through whatever means. And since you're getting this, you are actually now in a different echelon of traders who look at Sweden, right? Before they actually look at the UK. Look, the UK's growth is very, very small, but however, the volumes are large, but the implications are not the same. Because with these real growth rates and real individuals, these are what we're measuring. So this is perhaps a shift in certain factors. All right. So the US is down here at 22%. All right. So Singapore will grow is projected to grow quicker than the US in terms of ultra high net worth individuals within the next 5 years. So I hope you're hearing this. So they're projecting, and they've been doing this for years, and they have reliable information that India will be among the highest growing countries forecast, and China is in the top five. And if you were to ask anyone, to guess, like, hey, give me the top five of the countries that you think will be growing the quickest, like, I know what they'll tell you. They're gonna tell you that old list, the first one we saw, the list with all of the countries that have a lot of ultra people, but then they don't tell you that in those countries it's getting harder. There's so many studies that show that it's getting harder for people to become ultra because of those people. So there's less of a chance in those countries which already have a higher group of people, because the barrier to entry is higher than in countries where they are less. So there's going to be a lot of growth where people least expect. All right. So wealth has become a defining economic issue, right? Very, very true. So I'm going to read the highlighted part. And a clear understanding of who holds it, how concentrated it is, and how it is spent and where it is moving in the world is critical to understanding future global economic outcomes. That is why we have chosen to invest in creation of our own proprietary wealth sizing model. Now, for the first time, we can estimate the growth of world population in over 200 countries and territories global in any wealth bracket, and run scenarios to help us better understand risks and opportunities for our clients. All right. So, what are they yapping about? What are they talking about? So, let's take a look at this one first because it's right here at the top. Okay, so the global millionaire population continues to grow. And this is what we're looking at. So these are millionaires, okay? So this is the millionaire population. Continues to grow, okay? Keeps on growing. So yeah, there's a lot of information in these in the passages, but then we'll see how much of it we can go through because of time. All right, so they're saying that there are about 50 million people, and they're forecasting there will be an upsurge by the year 2024 to like 63.9 million millionaires. So it's pretty rare to be a millionaire. And this is also targeted at all of those 50 million people. So it is very important to recognize that, as the real world suggests, having money is having financial power or economic power, which is very important. All right. So now, let's take a look at this. Now we'll look at the billionaire population. So this is set to rise after a dip. So the millionaires have been steadily going up, but billionaires have gone down. And I think this is largely due to oil prices. So they're invested in a lot of these CFDs and equities and commodity and derivatives that are exposed to a lot of market cycle, a lot of resources, because the billionaires, the billionaire boys club, these are the people who have larger stakes in huge money generating investments such as oil. It's not as easy for a person to just walk in and to just walk into the APEC, the OPEC, and say like, oh yeah, I want to also start refining oil. No, you just don't do that. They said their own. So the way that they concentrated their wealth, that caused that dip, in my opinion. But then when you look at the millionaires, it's easier for you to start a company on anything and create that into millions. So making a million, you have to sell one product for $300, right? To 3,000 people. 3,001. You're a millionaire, right? So having that access to being able to create millions through just having a $300 product multiplied 3,000 or yeah, so you have to sell it like 3,000, right? If you sell it like 3,500 times, you become a millionaire, and you can have some change left over. So that's how easy it is to be a millionaire. You can just sell something 3,500 times. That's worth $300, and bam, you're now recorded on this graph. However, going on this graph, because looking at the numbers, there are only 2,335 people in the whole world who are billionaires. According to Knight Frank's research, according to this, the global billionaire population is said to rise after the dip last year. And for these very few people with so much money, they are growing quicker, and they're gonna grow to maybe 2,600. While us millionaires are looking at 63 million millionaires. So I actually believe that being a millionaire is a sweet spot, because you're like on this bracket. This is okay because you have like a lot of money, but I don't know. I think millionaire is a sweet spot because it's like you're still free, liberal, and able to do what you want. You have economic independence. But then if you're below this, millionaire threshold, it seems like life is not as easy, and that's just a fact of reality. And this is why this research is for us to understand how all of this goes on. All right, so where is wealth going? Where is good wealth going? Okay, so this is a very lovely chart. So where is the wealth going? Wealth advisors assessments of clients' wealth change. So this is the percentage who say wealth has decreased and will decrease. So this is negative in a sense that when it's in blue, this is for 2019. And when it's in the other color, in peach, right, it'll be a prediction. So it'll be in the future. All right. So we're looking at this futuristically and in the past. So basically, when we look at this graph, the two blue lines here protruding are showing us that there was a lot of wealth lost, or that decreased, right? Most of it was decreased in Africa. Most of the wealth that decreased in 2019 of ultras was in Africa, followed by India. Wow, this is interesting. These are the countries that are set to grow very quick. India, right? And Africa. So you see that there's substantial risk in these nations. There's the time when the leader of India just said, nah, we're gonna suspend all of the money. no one's going to be able to use the old banknotes. This happens, and there's some instability in certain countries in terms of policies and credibility, in especially in African nations, brought upon by so many different burdens, and this forces inconsistency in investments. So there are a lot of people who lose money, all right, and this was also followed by Russia. So Russia also has some stringent rules and laws. Oh, sorry, it was followed by Latin America, which is the areas where there's a huge black market economy. So since the markets are not as regulated in places like India, Africa, and Latin America, they are so many vulnerabilities that people with long-term investments face because there's no regulation. So it's very easy for someone to enter the black market and just start making anything. So this is the risk that China was posing to the United States, which triggered the whole trade war. Because China could essentially just make anything according to its disregard of intellectual property law. So the whole trade war is about the IP rights, which also goes hand in hand with the 5G technology, which they want to be able to use. So a lot of wealth is lost because of those. So this is just money that slips under the fingers. So to me, I actually see this as money going somewhere, because where is this money going? So to me, I'm seeing this as a cash flow, but then in an opposite direction. So this money might be going to other participants in the market who participate maybe in the black economy, right? The black market, the black economy, the black market, and things like that. Because the money has to go somewhere. It's energy. Energy cannot be destroyed, you know. But you have to make money, so you have to make energy. But yeah, you get the point. And on this other spectrum, who say wealth has increased and will increase. So the fastest growth was in North America. And the virtue of North America is that they have very large, very applicable, not applicable, but they enforce their laws, which gives a lot of investor certainty, and the market is regulated. So once you're in it, you're guaranteed that you're going to be riding the trend off the market until it goes bad, and then everyone loses stuff from the market. But then the laws are enforced, and people who invest in America are backed by confidence that the investment laws are going to be continued and they're going to be stronger. So the America has the biggest projected growth, 77%. So where is the wealth going? It's projected to still be in America in this year. All right, this year, this is for 2020 and 2019 only. But then when we look futuristically in a 5-year horizon, it looks slightly different. So for now, we are in a certain market with a certain trend, but it seems like in the coming years, things may start to shift in favor of certain other countries. So all of this could be loopholes that just need to be filled so that this graph can continue to go into this direction. However, India is also projected to grow the second fastest, which is interesting. India will grow very quick. And Asia, subcontinent, very, very robust growth and big growth projected. So the biggest wealth increase in 2019 was in America. The second one was in Australia and New Zealand. And the third one was in Europe. So these are the biggest economies. These are the economies that grow the slowest and they grew the most. Okay? So even though the percentage of their growth is small, the unit of their growth is more significant. So 1% of 1 million is more than 100% of $2. So it's not exactly about the increase in growth. It's also about the actual product of the growth and how this is termed an investment. So when we're looking at this information, we're looking at it from the eyes of people who handle investments for ultras who need to protect a lot of money. So in terms of qualifying our investments, this is what's happening. That there's ultra high net asset allocations proportion of the average investment portfolio invested in each asset class. So what's happening is that these ultras invest in different portfolios. So 27% is in property, and this is where you want to be when you have a lot of money, when you're investing in real estate. This is, the end goal for a lot of people. Even Abraham, his whole calling is for real estate. Like, yeah, there's a land that's for you. And equities. So, equities would be, these are capital goods. So, equities would be stocks, bonds would be like contracts for fixed income, self explanatory, and then currencies would be actual cash money. So this is also gonna give us a picture because these people have the most cash. Okay, so if you're trading, what you're trading is influenced by these people with the most cash. And as far as our data is showing us of these ultras, most of them North America and emerging in India. But then we have North America, we have Australia and New Zealand, and we have Europe, and we have the UK, and the Middle East as well, and Russia. And when you look at this, what you're looking at is the volume of the $5 trillion economy of the Forex trading. So, as every professional trader would know, America, the US dollar, is the most traded currency, and it's followed by the euro, and it's followed by the pound, the yen, and the Australian and the New Zealand dollar and the Canadian dollar. So all of these are the major currencies traded. Yeah. So I just gone through some of them, and then the emerging currencies would be India and Russia. So in Africa, the emerging currency that's traded the most would be the rand. So this is cash, but a lot of their money is in property. So property is basically a long-term investment. So this is why we look at things from a 5-year horizon. So when these people who invest in property, because once you have property investment in an area, this drives a lot of other businesses, which we don't have time to get into. But having this as their largest investment and the second largest investment being the stock market, basically, or companies, then this shows us that these two elements are what we should look for. And this is all directed by cash and currencies. And then we also have private equity. So this is when we look at venture capitalists and stuff like that. And then we have collectibles. So this shows us that they invest a lot of their money in art. And then we have gold and precious metals. So this could actually correlate with jewelry and things like that, because I do believe that most of the gold is traded in the equities. So these are the derivatives and things like that. So there's 1% for cryptocurrencies, which I think is interesting. So 40% respondents say European, Middle Eastern, and UK wealth will stay the same in 2020. So this is what they are saying. Okay, so let's move on. So this is interesting. So yeah, this is actually heavy reading, right? So the military acronym VUCA, volatile, uncertain, complex, and ambiguous, is one that was characterized in 2019. So this is what we're actually still seeing in the markets today. They're volatile, uncertain, complex, and ambiguous. Okay. So this is also speaking about um, the Iran tensions. So this is when this was published. So this was before the COVID tensions, but this is still speaking of Iran and uncertainty and trade wars, things like that. All right. No, I don't want to go into too many of these things in this article because my eyes are kind of feeling heavy reading all of this in terms of because as I'm trying to read and I'm trying to think and I'm trying to speak, so it's very exhausting to do this. It's more exhausting than just chilling and reading. Yeah, but yeah, because like I'm reading and yeah, it's like scanning. So if I miss anything, you're gonna find it. But then I think there was something I found here. Let me see if this is it. Europe may compete economically and China is revealed to be the crunch base, the world's private unicorns. So a unicorn is all right. So yeah, anyway, if I miss a lot, you're just gonna be able to go through all of this. But I want to read this part. All right, wait. I'll actually start here. So 28 global financial crisis. All right. So Mr. Ballin, however, sees a different type of bipolarity, one that he labels the group of two or G2. All right. This is an important theme. So here we're now getting into the themes of investing and the economic emerging trends. And this will be the last part of this video. Okay. So so this is where the money is made, so pay attention. So if you wanna, yeah, so you just keep on taking notes, finish this to the end if you've already made it this far, because it gets better. So this, he explains, is based on the idea of a world that operates under two very distinct ecosystems. One of these ecosystems is China-centric, with less emphasis on information privacy, intellectual property rights, freedom of information, and technology transfer. The other Western, with more weight attached to these issues. Technology, AI, 5G, and quantum computing will be the key battlegrounds for the two ecosystems and could determine how the rest of the world chooses to align. It's a strong statement. Which way Europe, the world's largest common market that sets standards and rules as one, moves will be crucial, says Dr. Bremer, although he predicts that ideological differences will mean that substantial alignment with either of the two ecosystems is unlikely. All right, it's a very high implication. All right, so as we enter this new page, we're gonna explain all of that. So just work with me. But here, this is the US and China. They dominate the unicorn landscape, technology companies with 1 billion market value at the end of 2019. And we see that the biggest one is the US, then China, and all of the other ones, all of them are a far cry from these two. So this is clearly the binary worlds that we're talking about here. Okay, so now we're getting into the trends that are emerging, and this is gonna be very important, and this is gonna be, yeah, data extraction. Okay, so let's just go through this quickly, and we just have this one page, and then you're free. But everything is very important, and download this, read it yourself, and yeah, comment as well, because iron sharpens iron. So Asia, the unstoppable. Okay, this is the first theme, and this is the yen. So, Asia is an unstoppable trend, says David Barlin. In terms of demographics, the region is placed for economic and wealth growth, and there is significant scope for expansion in investment markets. Asia's capital markets are one-fifth of the size they need to be to support the growth. All right. So let's digest this factor. Asia's capital markets are one-fifth of the size they need to be to support the growth. So we've already defined growth, or we've already outlined what to consider when we look at growth. So you could have high growth and still have it being a low factor of the total growth. But here we're seeing that the value of Asian growth has not been met by the value of the real growth that is in the economy. So we're looking at sentiment as well as looking at the actual economic factors. So in Asia's capital markets, we're seeing that they need to be growth to support this. And they're saying this is an unstoppable trend. Okay. So the political power of the region, led by China, is expanding too. So we're seeing that China is also growing, but here we're not considering China in isolation. We're looking at Asia, its position, its market, its capital flows, and all things considered in relation to the smart money, in relation to the ultra rich people. This is where they're looking, and they're looking at it from the perspective of Asia, but China being the standout. And China is consolidating its power in a number of measures, including anti corruption campaigns. This is very true. And that campaign is more efficient than how it would have happened in the States. In my opinion, it might not be as transparent, but then the way that Xi Jinping is rooting out so many people who are corrupt in his whole system, it's pretty efficient. Just like when you watch The Matrix, how the robots are so efficient, that's how efficient it is. And the other thing, the Belt and Road Initiative. This is something we can't ignore, but a lot of people are turning a blind eye to this, and this is going to increase the productive capacity of not only China, but the whole road. AI 2030 and Made in China 2025. So Made in China 2025, China's already making everything. AI 2030. So this is when President Xi went to Davos, and then he told them that by 2030 China wants to be leading everything to do with AI, from everything to do with AI and IP law, which includes things such as software development, robot technology, the drones, everything to do with facial recognition, 5G technology, internet accessibility, all of these things. China says by 2030, watch out, this is me. This is his goal publicly, okay? And the transformation is extraordinary in China and globally in the reaction to China. All right, trade wars are building Chinese global influence. The trade disputes in the US has benefited the country's world standing, as the Chinese have forged closer links with Latin America, Africa, and Europe, and they are playing the long game, says Dr. Bremer. In March 2019, Italy, okay, became the first G7 to sign to the Belt and Road. Okay, so the influence of China is clearly growing. Okay, and this is also bringing upon this phenomenon of conditionality, that when China does give you everything, since it wants to do everything, then there's going to be a condition that another country is likely to be given. All right, so this might affect how people consume Chinese goods. So Singapore based notes that this will contribute to global growth because there will be more goods produced and circulated. This China will remain the driver of economic growth and wealth. Countries that link with China should be able to ride on the next wave of growth. Okay? Where the investment goes will depend on the orientation towards China. Build a port or a railroad and everyone can use it. Yet when you have a Chinese data and surveillance system that orients the country towards Beijing. Okay, this is a real fact. So this is the first theme. Let's move on to the second theme. And we'll aggregate all of this data later. So, fintech future. So I hope you understand that this information is something that is not commonly pursued by a lot of market participants. So you actually getting this now gives you insight, foresight into what is happening so that you'll be able to position yourself correctly. All right, the second driver will be fintech future. Technology is an unrelenting trend, okay? Constant innovation is creating a new sub-market as well as threats. So we're looking at cybersecurity and fintech. So this is really no joke. So all right, let's finish this. And according to the business research company, the global fintech market is to be worth 128 billion in 2018, expected to more than double to 310 billion in 2022, an annual growth rate of virtually 25%. This is huge. So this is financial technology. The market growth encompasses a broad spectrum from mobile payment applications and cryptocurrencies to how individuals manage their finances. So this is no joke because of this share of 128 billion, there's a person who is from my country of Zimbabwe. His name is Strive Masiwa, and he has the biggest financial technology company in the country. And this made him a billionaire over these couple of years, like since was it 2016, 2017, 2018? Like his net worth just grew from 1 billion up to 3.6 billion, like in a flash, through fintech. And this is in a small country like Zimbabwe, where growth, when it happens fast. And this is also a risky environment because there were so many risks that he has to face. However, he operates in other countries such as Botswana and Kenya and Nigeria. So this is like financial technology, and this is a live example of one of the richest Africans in the world. And this is happening to an ultra high net worth individual of the highest echelon. And this is a trend that is being uncovered in this segment, right? So this is also noteworthy. In 2019, Facebook's plan for a digital currency, Libra, caught headlines. Yet there is already so much more happening in this space. The payment side of fintech has gained rapid traction in China. For example, as it moves to be the world's first cashless society, 34 of the top 100 Chinese fintechs are payment services. With the rise of the e-commerce, this upsurge looks set to continue. Okay, so this is where money is going to be made. And the whole thing about Facebook and Libra, however, the sentiment about it is this was inevitably going to happen. And when I first learned about the blockchain, digital markets, and stuff like that, it was just obvious to me that because of the applications, governments are going to start using it and businesses. But now the problem is the people who use it will not have any barriers to entry of other people who want the to join the fruits of the investments. So right now, it is an emerging trend. But by the time that people realize that they should invest in this and that, it won't be so easy to make money in those sectors. Money would have flowed elsewhere. So this is why we're looking now and in the near future and in the near distant future. Okay, so now this is another major trend here. So this is called purpose maximization. So capitalism and the relentless pursuit of economic growth are now coming under intense scrutiny. Wow. By who? In response, businesses and individuals are increasingly being driven by this purpose maximization, not just profit maximization and shareholder returns, as Lee and Bailey discussed earlier. This is a real thing. So the wider environmental, social, and governance movement is now an industry in its own right. Some even insist that every company must by law have a purpose that is not solely about profit. Although ESG benchmarking standards are largely unregulated and may have unintended consequences for investment flows, there is evidence that companies that look beyond profit can deliver better returns. I think that is very true. That when a company is people oriented, it definitely is genuinely people oriented. It definitely gives you better products. Everything is just better. So this is increasingly becoming a global playing field with some mooting the idea of import tariffs based on carbon emissions. How level this playing field can be in the bipolar or G2 world we discussed earlier remains to be seen. While some worry that consumer driven consumer driven move away from profit maximization could dent economic growth, others argue that a new mindset will create different types of consumerism. So I wonder what you think this means. So how could consumerism possibly be different? How do you define it now? And how can consumerism be a good thing? Okay. So this is an interesting thing, because when we're trading, all we're doing is putting out our best ideas. So one theme that is gaining traction is the circular economy. Under this model, resources do not end up as recyclables since products are made to last several life cycles. This not only eliminates the need for high cost, low value recycling, it encourages direct contact with consumers. So this changes it, right? Leading to greater insights, limits exposure to volatile raw materials markets, and overall increases consumer loyalty and business resilience. Yeah, that is definite. For example, Lego has introduced schemes where they can give back old blocks and is looking to trial a rental scheme for its toys. Interesting, right? Renting toys. That's a significant change in consumer behavior. Like, hey, I'm gonna rent a toy because you only need it for a certain amount of time, I guess. So, the notion is becoming increasingly prominent in the luxury goods space too. A report by luxury research groups Altan found that 21% of affluent consumers surveyed in the US and the UK, France have already rented hard and soft luxury goods, and only 20% would not be interested in doing so. So, as we know, everything is a trend, and a trend, as we understand it, comes from the world of fashion, or it's also applicable. I'm not sure if it comes from there, but then it applies to the world of fashion. something that is trendy, and that trend is always a trend. And when it starts to trend, this becomes fashionable. And once something becomes fashionable, it's no longer fashionable, and the trend changes. So the trend is always changing. And we see that the trend starts with fashion or luxury goods. So this is why these people in these ultras, these are the trend setters. Like it or not, these are the people who make your clothes in these corporations, in these countries. Like it or not, these are the trend setters, and what they're doing is what's going to happen. So if more of them are willing to rent toys, more of everyone is going to be willing to do that, because that's the trend. All right, now I just want to speak on purpose maximization once again, because we went through a lot of information, the ESG movement. Okay, so this is how the corporate outlook is changing, which is something that I've been talking about for a long time with a lot of people. And I guess it was it's evident to me that there's so many movements that are changing this, and I don't know how significant this is going to be, but consumer trends are going to be changed. All right, now new data. Okay, investors and businesses seeking better returns in an increasingly complex world are looking beyond conventional insights. The new data economy is important and complex, and it is having a profound impact on the markets. Much of the data is based on consumer sentiment and proclivities scraped from websites and social media sites. Bloomberg now includes some Twitter accounts on its financial information terminal, which helps to explain why social media posts such as Donald Trump's regular tweets can have an immediate and sizable impact on financial markets. Okay, so new data. Okay, so we're also seeing the emergence of satellite technology that can measure nighttime light activity, gather real-time updates on the supply of oil held in different locations. Data on nighttime lights, for example, have been shown to correlate strongly with economic growth. All right, and it is pointed to the potential miscalculating of GDP by some nations. And this is interesting. GDP itself is increasingly being questioned as a measure of economic success. Wow. Some argue that it was not only fully capture the growth value of the service industry or technological capabilities. Other indicators of economic activity and potential include looking at the entrepreneurial economy. One measure may be the number of startups and the unicorns a country has. Others even Alright, so other indicators of economic activity and potential include looking at the entrepreneurial economy. So the entrepreneurial economy is interesting because this is something that at the Davos speech you can watch that when Xi Jinping made an address, he actually said that there are different indicators of our economy which include innovation, which should be quantified as an economic indicator. Innovation. Xi Jinping said that. So this is now something that is being implemented to a certain level, to a certain extent. So one measure may be the number of startups and unicorns the country has. Others even suggest that the happiness of a nation is a better indicator of its prosperity. Oh, what do you think about that? Happiness as being the indicator of prosperity. And in that case, then the best countries in the world would be places like Denmark, Norway, Sweden, and Netherlands, and uh, Norway, Poland, Switzerland. Those are the places which would be happiest, right? Those types of places. So this is showing us different trends. So just to recap, yeah. So now let's close all of this. Let's close all of this down. So top risks to wealth creation in 2020. So global economic slowdown. This is the greatest risk that they saw at the moment of printing this. So we still have to consider this. The economy was already slowing down, and let me show you something that I found interesting. I hope I can find it. All right. Um, all right. I think it's in another article that I was reading, but it was showing that there were everything was okay in terms of the global infrastructure, but it seems like ultra high net worth individuals started uh, keeping most of their money in cash, just anticipating an economic recession, which was long overdue. And I actually got this sentiment from watching Ray Dalio. And he's a very great educator in terms of knowing things about cycles and markets. And what he was talking about are cycles. And in his 2019 videos, he was often talking about how the economy is going to slow down. And this represents the notion or sentiment of many ultras. And this tended to just happen, the global economic slowdown, which is given by low growth rates. So coming out of this recession, there's going to be greater growth rates, but it's not going to be that simple. So trade wars, yes. Negative interest rates and bond, yes. Exchange rates, poor governance and corruption. All right. So before we go to the bottom line and close this off, I just want to emphasize something, that what we're looking at is that Asia is noted to be unstoppable. Like we're looking at fintech, we're looking at the difference, the change in the economic structure. So when you actually look at this notion, this driver, economic driver of purpose maximization, what you discover is that this was written in a forecasting manner in 2019 ish. Of course, this has some 2020 aspects such as the bombing and stuff like that. But then this was written in the past to project the future, and the 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 coronavirus Great Lockdown episode is showing us that the economic system is most likely going to be altered in certain ways. So this is going to this is probably leading up to something like purpose maximization, which will be another factor that will be in discussion. So businesses are going to be speaking about environmental, social, and governance issues because of what's happening right now. And what I like about this piece of information is that it was given as a forecast before anything happened, and now the economic or the real world situations are acting as a catalyst to all of these factors. They are a catalyst, aided by new data that is still coming in, okay? Aided by purpose maximization. People are going to need to do that. But at the top of the leading catalysts and indicators, we see that Asia is unstoppable. If we've already seen, it aims to lead in all forms of technology. It intends to be manufacturing everything, right, by 2025. And it is one of the fastest growing economies in the world. And the whole region is featured to be one of the fastest growing economies with some of the highest some of the richest people in the world. So we find them in Asia. We find them in places where they are able to consolidate wealth and grow it. So there are so many conditions in these areas that are conducive to wealth growth. And yeah, I sound like I'm an Asian apologist, but then in a way, this is what is happening. So So let's see. So yeah, let's get to the bottom line and see what else is up. Yeah, I hope that yeah, we don't have time to go into every risk factor in detail because I really don't want this to be way too long. So let's just wrap this up. So the bottom line, what does all this mean for investors and entrepreneurs? So this is what we are, right? We're entrepreneurial investors. We're innovative. We're people who see opportunities where everyone is looking, but no one is actually seeing. Okay? Because we're people who uncover such information, such as this, for educational purposes. All right. Oh, yeah. And by the way, before I forget, I always forget, if you do want to see some of my own investment methods, there's a book in the description. You can just you take a look at that. I do appreciate it. It's also the only way that you can actually possibly thank me if you're able to. But if you're not able to, if you're not able to pay for a book, you can just pay attention. It's still all good. But if you can, please do support this network, support my net worth, and let's keep this going. So for investors and entrepreneurs like us, all right, against such a complex backdrop, it's very complex, right? Because the whole landscape of it is not easy. It's extremely complex because I had to explain so many things, and I left out so many things, but I hope that in future videos I'll cover them in one way or another. But it's very complex, but then we got the broad picture. So the ability to tell stories will be crucial. This is interesting because last year, economist Robert Shiller explained his theory of narrative economics, how adding narrative can influence and motivate. Interesting, right? So this also speaks to something like neuro-linguistic programming, where your mind is programmed by your linguistics. And I think there's also some information to do with this in some Noam Chomsky works. But this is Robert Shiller of the he's an economist, and how so he says adding narrative can influence and motivate. So when you're investing on a large scale, because this is speaking to billionaires, so when these billionaires are investing, what they're thinking of is putting it in a certain narrative, a story. Like when you watch Billions, every investment has a narrative that you can actually follow. That's why the whole show even exists. However weird however it is, I'm not gonna rate it, okay? Because I really like it, and I'm sensitive to certain things. So yeah. Anyway, so how adding narrative can influence and motivate. Very important. And how living that narrative can drive resilience and success. You will not be able to hold an investment if you do not have the right story or the right faith. You will not be able to. So that's why you could be in a winning investment, you could be in a winning trade, you could be in the right trend, but then you don't have the resilience to successively hold this to success because you don't know why the Indian stocks are going up, So thinking long and remembering the fundamentals may also be one way to navigate choppy waters. So what we went through are roughly the fundamentals, what the landscape roughly looks like. There are other ways and methods where we get deeper into this, but what we're looking at is how we translate this to be a sentiment indicator, which is very important. So don't underestimate unstoppable trends, the unstoppable trends, okay, such as fintech. So I gave you an example of a person. Google him, Strive Masiwa, the CEO of Econet Group. Okay, and another unstoppable trend is the Belt and Road Initiative and how it's going to impact the countries that it's in contact with. And always look at the bigger picture. Okay, this is what this is all about. Looking at the bigger picture. I even zoomed into the pictures to make them bigger for you. So remember too that data, reality, and public feeling don't always marry up. So this is also key. So when you're going back to investing for your own self, know that what we're looking at is the chopper view. We're looking at it from a helicopter. But then when you do begin to actually manage your trades and invest, it's going to look very differently. So you're going to wait for the data to come in, such as employment figures, um, such other surveys and reports. And reality, what you actually see in the price, how much is it, and public feeling. This is another sentiment. Okay, how many people are invested in this? These retail traders, the most number of them. What are they really doing? That's the public feeling. So you have to know what's what, and this was just blowing out a lot of noise, uh, focusing on emerging trends. So look for other indicators, seek out alternative data sources, and you're already doing that by watching this video, because not a lot of people know this data source, and I don't know if there's another video like this online. I hope it's the first, and I'm not actually hoping that it's the most popular, because once a lot of people know, then our edge is gone. So this is a great edge that we share with close to 3,000 other billionaires. Okay, this is their edge in a sense, because these are the banks that they're talking to. But however, they do refine their entries and exits and all of those things. But we're now taking the approach of a professional in this landscape. Now taking a billionaire's professional approach to the market by us understanding these fundamentals, the risks, and looking for certain rewards. Like, we will be expecting a 27% growth in all of your portfolios in the next 5 months, because you know where to put your money. What you're doing is you follow the money, 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 follow the money. So look for other indicators. This is important. Keep on digging. Seek out alternative data sources, of course, and learn to read between the lines. Yeah, learn to read between the lines. All right, so I'm gonna stop this video now, and I do want to thank you for hanging out with me, reading with me. This is my reading room, and I'm just chilling here, and I'm just trading, watching the markets as I actually read this separate screen, and yeah. So I hope that we'll get into another article piece. Really get deep into it, and get some more information, because the most valuable thing that I know of is information. Wouldn't you agree? That's a Gordon Gekko quote, and it's something that's very crucial, because the more information you have, the better your decisions, and the more that you have for you, for your family, for your people, whoever you work for, like your own driving force. Everyone's working for their families. So if you're working for your family, if you're working for that growth, if you're working toward that, then it's only right that you get the essential, optimal information that will give you high growth, a high net worth, and even boost your self-esteem. Because there's so many people, like you see, like in Africa, there's going to be a lot of growth, but in that growth, there are going to be a lot of people left behind. And this is a factor of how the world is just structured. Because as we started this conversation, I was explaining how the Pareto principle operates, that 20% of all of the wealth, now 80% of all of the wealth is with 20% of all of the people. Okay, so 80% of all of your efforts are only going to give you 20% of your results. So 80% of your results are going to come from 20% of your efforts. So when you read information like this, or when you understand a video like this, what you have already done is you've already transformed yourself into the other 20%, where we speak in terms of millionaires, right? Where we speak in terms of billionaires, where we are charting our own financial paths because we're trading. This is an ability to make money. This is an ability to see opportunities through capital flows and by generating ideas. So you understanding this gives you the ability to change your own life or the people around you's life for the better, because you now have the economic capacity to do that. Because it's really nothing if all you can do is offer someone, a shoulder to lean on, but when they need money to send their children to school, and all you can do is say, oh yeah, cry on my shoulder, but you only have economic capacity, or you only have practical power when you have economic capacity. That's why the richest countries in the world are ruling everyone else. So I won't call them the poorest countries, because that is an illusion. But the richest countries, even that richness, however elusive that is, those countries are ruling over everyone else because they are in control of the information. So they're in control of how everything is ordered and structured. And without them, the world does not function. So, so I look at things from all of these dimensions. At heart, I'm a a metaphysical philosopher. I like metaphysics. I like philosophy, and finance is a philosophy. So all of this is very interesting for me to read and uncover, and to speak about, to share with you about. That's why I wrote certain things and have certain courses, have this channel, because it's really fascinating. And I think it also has the potential to practically change your life. Like, this is the only way, in my own understanding, that I can impact your life in a practical, enduring way. Because a wise man is marked by his ability to leave wealth, not for his children, but for his children's children's children. That's a wise man. That's the only ability. So these people who this information is targeted at are people like you and me, people who are wise, smart money. So from now on, because you know this, you are now part of the smart money. But what you have to do is to develop that skill that they had to learn. Everyone has to learn. Like, I was watching Bill Ackman. He was saying that finance is the easiest thing to get into. And this is where a lot of the money is, because a lot of the money is in equities. And most of the money is in real estate. So if you want to make money, get into real estate or get into finance. But the thing is, finance is the easiest one, because all you have to do is to be able to read information. All you have to do is to be able to assimilate information. So what you've done just now is you've read this with your eyes, with your ears, with your body, because you're watching, you're hearing, you're seeing, you're feeling, and this has a deeper impact than you just reading it alone. This has a deeper impact than me just reading it alone. So together, what we're doing has a broader impact, because we are part of this. We're part of a group which is actually seeking towards getting more knowledge and information. Not a lot of people have made it towards the end of the video, right? And not a lot of people will even get to see this information that you're seeing. So I do appreciate this, and that rant was that vent, not a rant. The vent was my blessing to you, that through these words which are creative, let it be, So as long as you hold the information, I'm sure all of the balances in the world are gonna lead you towards more knowledge and clarity on your finances and everything that you do. All right, so I'll see you soon. Thank you a lot.